Over 118,000 Bitcoin has been gobbled up by these ETF issuers in the first 8 days of trading. With the Grayscale outflows slowing and the halving less than 2 months away, is the infamous supply squeeze just around the corner? Haters are left in disbelief. In a historic move, Bitwise becomes the first ETF issuer to provide a Bitcoin address as proof of reserves. Can't do that with gold, can you, Peter? Also, learn about how Bitcoin mining is electrifying Africa. Tune in. You're not going to want to miss out. Welcome to the Thursday, January 25th edition of the Bitcoin ETF Daily Show. I'm Dante Cook, head of Swan Business. In this show, we discuss the latest news, events, winners, losers, and key information surrounding these historic Bitcoin ETFs. Here at Swan, we're on a mission to educate the world about Bitcoin. So please like this video and subscribe to the channel to extend our reach and help us cut through the noise on YouTube. The biggest news is that the GBTC daily outflow may indeed be showing signs of slowing down. This week, we've seen the Grayscale net outflows start at 641 million, drop down to 515 million on Tuesday, and finally down to 429 million yesterday. While we can't confirm today's outflows, we can look at the volume. 500 million is still down from yesterday's volume of 615 million. We may be seeing light at the end of the tunnel here. Let's get into today's flows. Yesterday, we saw the single greatest one-day net outflows with 158 million leaving the ETFs. That's coming off a day of 106 million in outflows the day before. BlackRock saw a significant dip in inflows with only 66 million yesterday, while Fidelity outpaced them by nearly 2x. When it's all said and done, BlackRock now holds 1.82 billion in assets under management, with Fidelity in second with 1.64 billion, and ARK edging out Bitwise for third place with 512 million in assets under management. BlackRock's advertising may be working out after all. I'll be interested to see what BlackRock talks about on their webinar tomorrow. We'll record the findings of what we figure out and what we learn with you guys on Monday. But yesterday goes to prove one thing. The ETF net inflows and outflows generally aren't driving the price right now. Bitcoin's price was in the green yesterday, even though there was net outflows. And we've seen many days where Bitcoin's price has been in the red, despite there being net inflows. So here's the point in our episode where we always talk about zooming out. Bitcoin is highly correlated to global M2 money supply. That is a key indicator that you should be following. And as you can see, fiat liquidity always goes up and to the right. But in the short term, global M2 supply has been decreasing. The US money supply has decreased by 2% in 2023, which was the largest annual decline on record dating back to 1959. Available supply and hash rate are higher signal indicators than the inflows and outflows in ETFs. This chart gives us a great visual about the decreasing supply of available Bitcoin after the halving. Shout out to Bitcoin Times for the slick visual. Speaking of mining, with a very particular skill set, Swan's Bitcoin mining team has been finding energy faster than Liam Neeson catching kidnappers.
If you are looking for ransom, I can tell you I don't have money. But what I do have are a very particular set of skills.
Finally, coming out of stealth mode, Swan's Bitcoin mining operation has scaled faster than any other operation in the world thus far, going from 0 to 4.5 exahashes and mining over 750 Bitcoin since the initiative launched less than a year ago. Check out the tweet announcing the historic press release. Speaking of stranded energy, I have to give an incredible shout out to my friends Alex Gladstein, Eric Hirschman, and KG, who are doing incredible work to provide sustainable electricity to rural Africans and make Bitcoin accessible to everyone on the continent. Also, check out Alex's latest article in Bitcoin Magazine to follow the incredible work happening in Africa. The link's in the show notes. So, it's only fitting that we go to the news about Bitwise, right? Bitwise became the first player in the ETF space and in the entire financial services industry to actually post its proof of reserves for everyone to see. Have you ever stopped to think that we've relied on all of our financial institutions who simply say, trust us, we have your assets? Do you really trust them? Do you? Taking a page out of A Creature from Jekyll Island, the fractional reserve banking system has created the ultimate Ponzi scheme, allowing certain financial institutions the privilege to only hold up to 1/10 of your assets and reserves. This is one of the many reasons that holding real Bitcoin is incredibly powerful. While not trusting and verifying is something Bitcoiners have grown accustomed to, this move by Bitwise marks a significant milestone for Bitcoin in its ability to force the traditional financial system to evolve. It's definitely smart that Bitwise chose to be the first mover here. Other ETFs will likely be forced to follow suit, because why wouldn't they? If they don't post it, we'll assume they have something to hide. There's very little risk from publishing a public address that can already be found by anyone using Bitcoin's open public ledger. The paradox in Bitcoin is that although it's a trustless system, trust actually increases dramatically because we can audit and verify the assets that are indeed where they are and are broadcasted to be. But you know what also increases dramatically? Trolling. Imagine trying to explain to your father-in-law that you can mathematically prove the existence of every penny's worth of Bitcoin in the ETF after dusting one of the largest institutional funds from your couch. You can't make this up. Meanwhile, the gold behind the ETFs that are out there being traded today are sitting in unaudited vaults. I'd love for our friend Peter Schiff to contrast this with gold or gold ETFs, where there's no way to actually verify the custodian central banks or countries have the gold that they say they have. Speaking of gold, for all the people who think that the government will be able to pull a Gold Reserve Act of 1933, all of the world's largest financial institutions, BlackRock, Fidelity, Franklin Templeton, Invesco, have made Bitcoin accessible to millions of investors with over 25 billion in holdings. This matters, according to Avik Roy, our Bitcoin friend in Washington, because it massively enlarges the special interest in favor of preserving and growing Bitcoin's role in US financial markets. If you're a member of Congress or an ambitious regulator who dislikes Bitcoin and wants to enact some of the restrictive policies described like the 1933 Gold Reserve Act, you're not merely going to hear from hodling plebs, but from major financial players who, like it or not, have considerable influence in Washington. Here's some final thoughts that I want to leave you with. In just 46 days, the Fed will be ending the BTFP, or the Bank Term Funding Program, which the Fed created to help banks receive full value for their underwater assets for up to a year. This should serve as a wake-up call to remind you that we're coming up on the anniversary of the SVB collapse, one of the largest bank failures in US history, where the bank didn't actually have the reserves to meet client demand during a bank run. Newsflash, these banks never actually had your money. This event just exposed that fact. Other than Bitwise, can you really be sure these issuers can verify your actual Bitcoin one-to-one? Own real Bitcoin for yourself and not just an ETF. And also, verify it for yourself. With that, we're signing off for the day. If you've enjoyed these videos, please subscribe and follow the Swan YouTube channel for the best Bitcoin news out there. Until tomorrow, this is Dante Cook with Swan.com. Don't trust, verify.